Good morning, folks. Bitcoin going through another nice, delicious little scary slip this morning. And I actually want to address a follower comment in today's video, which is, are we going into a bear market? We'll get onto that in just a second, but first of all, look at the mark price. This is nice and scary for a lot of people. We're currently trading at a price of $107,848. I'm down nearly $5,500 US on my Bitcoin long position from an average entry price of $113,277. That is a 20x leverage, one BTC position. No, I am not looking to close that just yet. What just happened after our nice, placid, low volatility weekend? Well, you guessed it. Long liquidations, $334 million worth over the last 24 hours. And just in the last 4 hours, $240 million. If you've been following along, if you've been watching this, by the way, please subscribe if you're interested in this kind of content. If you're watching from afar and not subscribed with notifications on to get these, you will have seen, if you had done all of those steps, that we were anticipating this once again, because yesterday, going into the weekend, liquidation levels in the market were balanced, but those longs were still creeping in. And you can see now on the Bitcoin exchange liquidation map here on CoinGlass, that has been wiped out to the downside once again. We are stacked to upside short liquidation risk. What that means is if prices bounce from here, even just a little bit, we're going to get into a position where we're going to start liquidating some of those shorts, where the exchange is going to literally buy Bitcoin in order to cover those short positions and get those traders out of the market, get those short bear speculators out of the market. Some key levels here up at $110,000 where we were trading over the weekend. That is worth about $570 million worth of short liquidations. Remember, they don't all have to go through, but just a little bounce, just a bounce of $3,000 from where we are right now would equate to $570 million worth of short liquidations and a big spike, possibly even an overextension to the upside. This is topping out at about $2 billion worth of cumulative short liquidation risk on the daily chart here. And as we can see, a move like that would really not be a lot, okay? $110,000 is the point of control of the volume profile, the fixed range volume profile drawn in from the bottom of this big move down, driven by that historic $19 billion liquidation event. No, I'm not scared. The follower comment was, are we going into a bear market? And I think, personally, statements like that are music to my ears, okay? Because I do not think we're going into a bear market, but I think the more people that do, the more boring and dead and dismal this market looks. Okay, first it'll get dismal actually, and then it'll start to become boring, okay? Nothing to see here, folks. Let's give up. Let's wait another year. Maybe the bull market will be on again then. That is the moment at which max pain will occur. That's the moment most people will be caught in surprise on the opposite side of the market. That is the moment when it makes sense for big money to jump in with big limit orders, and we will find buy-side liquidity when that happens. If history repeats itself, history doesn't tend to repeat itself word for word, but it does tend to rhyme. And if we see a repeat of what happened the last time we got a massive big sell-off like this, I think that will catch a lot of shorts off guard. And comments like that make me think, you know, the more crypto people are starting to think we're going into a bear market, the better, because we're getting closer and closer to the point at which this thing can actually turn around. In macro news, the chance of another 25 basis point rate cut is now up again to about 70%. So that is looking good. The macro stage is set. Don't be worried about these sell-offs, but please don't get liquidated, because if you're out of the game, you cannot win the game. As always, just my opinion, just shared for entertainment purposes. Nothing I say should be considered financial advice, but thank you so much for watching. Plenty more to come. Catch you in the next one. Bye.